Hello, everyone. Welcome to day one of our home buyer forum. Today, we're going to be covering the home buying process. And this is a 3-day event, and we'll tell you a little bit more about what's coming up later in the week, hoping that you can join us for some of the other webinars as well. Just to let you know to all the participants, this is in webinar mode. That means we can't see you, we can't hear you. So go ahead, eat your lunch, do whatever you need to do. If you have kids home on a snow day, as I know one of our speakers does, that's fine. We can't hear anything in the background. That's okay. We do want you to participate actively in this webinar. So if you have questions, please submit them using the Q&A feature of Zoom at any time. And we're going to save questions mostly till the end, but you can put questions in anytime. If they occur to you, go ahead, drop them into the Q&A. If you don't see Q&A on your toolbar, you might need to go into the far right corner of Zoom. There's 3 dots. Click those. They say more. And then you'll see Q&A. You can drop a question in. If you want to practice the Q&A feature, you can jump in there and let us know where you're joining from, or just say hi. Only the panelists will see that. So you can test it out if you want, or drop a question in at any time into that Q&A feature. This presentation is being recorded and it will be posted on our YouTube channel. So you'll be able to go back and watch it later if there's something you miss. You're also going to receive the slides. Everyone who registered for this webinar will receive the slides by email. So you'll be able to, you can participate without worrying about writing everything down because you're going to get them sent to you. We're also going to ask for you to fill out a survey afterwards. That link will be in the email, and we do read all of the surveys that we get back, and we use it to try to guide ourselves on changing things up for future seminars or webinars. So let us know what we do well. Let us know what we could improve. We're here for you, to serve you. So love to hear your honest feedback, and thank you for that. My name is Jen Fries. I'm the Community Engagement Manager for the Harvard Federal Credit Union. I am a certified credit union financial counselor. I've been with the credit union for about 2 years, and I do have experience buying and selling property in the greater Boston area and in New Hampshire. So I kind of know a little bit about, from a personal point of view, about buying and selling both a condo and a house in the local market. So I may chime in here and there on my stuff that I know. Just to give you a little sense of the format. Um, Again, this is a 3-day event. Today, we will be walking through the home buying process, what you need to know, what happens when. So this is going to be a very useful starting place for a lot of people. Or if you've just been out of the market for a while, like you're selling a house and you're buying, but you haven't done it in a while and you've forgotten, this is going to be a refresher. Tomorrow, we're going to have assembling your team. That's when we're going to hear from a realtor, Dino Confalone, and a lawyer, a very experienced real estate lawyer, Sarah Ricciardelli. They'll be walking you through some of that, and some questions that you have may be better answered by a lawyer or a realtor. So feel free to join those webinars if you can. Then we have affordable home buying on Thursday. This year, we're excited to have speakers from the city of Boston and the city of Cambridge to describe their home buying programs. So those are going to be most relevant to people who live in Boston or Cambridge, but they're going to touch on some other things as well. So join us on Thursday if you're able to do so. And then finally, we have an event on Thursday at the Painted Borough. It's in person, margaritas and mortgage advice, where you get to meet the mortgage loan originators in person and some of the other speakers. We're not 100% sure given the weather. I hope everyone's doing well. We will let you know if we end up having to postpone that event. Right now it's on for Thursday, but we'll let you know if we need to push it back. So hoping everything gets cleared pretty well, and excited to have an in-person event and see you all. So before we dive into the content for today, we do get the question all the time, what is a credit union? How is it different from a bank? So we just want to touch on that. I know a lot of you who are here are already members of the Harvard Federal Credit Union, so you may know very well. But there are people here who are new to us. We just want to mention that a credit union is a not-for-profit financial institution. We are owned by our members. So as soon as you open an account with us, you're a member of the credit union, you're a part owner. So we're locally controlled by our members. We're very locally focused, community focused. We do lots of financial wellness webinars. This is one of them, but we do workshops and webinars all the time for our members on things like budgeting, credit, money habits, improving your money habits, all kinds of things. Retirement. So we are dedicated to the community. We do a lot of volunteer work as well, and other kinds of ways that we partner with nonprofits and the community generally. So other than that, like local community focus, the other thing you should just know, just from a money standpoint, is your credit union can do everything your bank can do. We can give you a credit card, we can give you a mortgage, we can give you a car loan, high yield savings, checking accounts, obviously, all the different things that you might be used to at your bank. However, in general, you're going to find that our fees and interest rates are a little better. Credit unions tend to be a little bit better than the average because we are here for our members. So we're not trying to like charge you a bunch of surprise fees. If you've ever had that bad experience, it's very unpleasant. And then, yes, we are local here. We don't have a ton of branches. However, you can bank with us on the app. You can bank with us online, obviously. And we also have a network of with other credit unions and cooperatives across the United States where you can walk in and do your banking in person with them as though you're with us. And it's called shared branching. And you can find that on our website. So if you end up leaving your job, there may be a job that made you eligible for the Harvard Federal Credit Union. If you end up leaving, or you leave the Harvard community or your hospital, you can stick with us, still bank with us from wherever you go. And if you're not yet a member, we have lots of new pathways to membership since we became federal. So there's a way very likely for you to become a member. So please take a look at the information online. I think we're going to send you some stuff if you said you weren't a member, but you're interested, so you can learn more. And you can always check our website for that. All right. All that ramp up. Now, I do want to introduce today's presenters. We have two of our senior mortgage loan originators on the call as panelists, and really delighted to have them both here. They have decades of experience helping our members reach your dreams for home buying. And Daisy Familia tends to focus on or is in office at the Harvard Square branch and in the Longwood medical area at our One Brigham Circle branch. And then Ryan Douglas is at our Mass General Hospital branch. We have a branch in the hospital on the first floor behind Coffee Connection. And then in our satellite offices, so we have an office at MGB and Charlestown Navy Yard. So Ryan is covering some of those. All of our mortgage loan officers are here to help you. Daisy does speak Spanish fluently, so if that's something that you would like, just know that. And really happy to have you both here with us. Thank you, Ryan and Daisy.
Thank you. We're very excited to
Yeah.
be here.
Thank you,
Yeah,
Jen. Thanks for putting this together.
yeah, I'm excited. Okay, so Ryan, I think you are going to kick us off now
Yeah, I'll
with
kick us off. Hi, everybody. Thank you so much for joining us today. Before we get into the home buying process, I just want to go over today's agenda real quick with you. So we're going to start, we're going to go through the home buying journey. So we're going to walk you through the process of home buying. And then we're going to talk about mortgage qualification. So we're going to talk about all the things that kind of go into qualifying you for that mortgage. And then we're going to go over to the next steps of becoming a homeowner after we follow that up. Great. So before we jump in, I just want to kind of cover some of the benefits of obtaining your mortgage through Harvard Federal Credit Union. So we offer a personalized service. We have a range of mortgage products that we offer. So all different loan types to fit your needs, whatever you'll need to kind of get your purchase through or your refinance. We're happy to work with you on that. We offer a digital process. So we do lend in all 6 New England states and Florida. So everything can be done online remotely. You can come meet us in the branch though, if that's what you'd like. So just let us know. We're available either way to assist, especially if you're out of state though. So looking post closing, a great benefit that we offer is we have in-house loan servicing. So once your loan does close, we will always retain the rights to be the servicer of your loan. So if you ever have any questions, our service department is here to assist you. We can put you in touch with them to answer any questions, that come up, property taxes, things like that. In addition, we also have portfolio lending capability, which we can review for you on a case-by-case basis. So then a couple of other things I want to discuss. So we have competitive rates and credits. A lot of these are geared towards first-time home buyers. So a first-time home buyer, it's going to be anybody that's never owned a home before or hasn't had ownership in a property in the last 3 years. So if you fit into that, you are going to be a first-time home buyer. So with that, and this next one, this is for all of our membership base. So this isn't just for first-time home buyers, but we offer a discounted interest rate if you establish a Crimson Elite checking account with autopay with us. One thing to note on that, if you are under the area median income, you can open any checking account that you desire. So those are set by Fannie Mae. There's a lookup tool that we can send to you and we can take a look at that. And then for our first-time home buyers, so we have low down payment options for eligible borrowers, and then we have a $500 closing cost credit for the first-time home buyers. Great. So yeah, where do you start? Honestly, first place to start is to give one of us a call. Set up a time to talk. We can go over everything, answer any of your questions, kind of see, where you're at in the market, and we can discuss everything. And we do that through 2 ways. So typically the first initial conversation, it's going to be a pre-qualification. So with that, it's all going to be verbal. So you're going to kind of relay to us, your needs. What are you looking for purchase price, loan amount? If you don't have one, we can work on one to kind of give you a better idea of what you can afford under the lending guidelines. So with that, we won't be running a credit check. We won't be reviewing income. It's just an informative phone call for you to start planning. If everything sounds good after that first step with the pre-qualification, we can move on to the official pre-approval. So with that, you're going to submit an online application. We're going to review it, and then it's going to be very official. So we are going to do a credit check, and we're going to review your credit report. We're going to take a look at your down payment and assets. We're going to look at your income. So we'll need to get all of your income documents, so your W-2s, pay stubs, things like that. Great things to kind of get on hand ahead of time, so you have a general sense of your exact income, and we can calculate it too. And then we'll discuss products. So products and rates, it's always a big one to go over. So we have conforming, jumbo, low to moderate, and adjustable rate mortgages. So we'll work on a product. We'll talk about, mortgage payments and things like that. And really it's just going to be, we'll cover everything as you start your home buying journey. Can we go to the next slide, Jeff?
Yeah.
Oh, there we go. Hung up a little bit.
Sorry about that. So I do want to mention, if in this process, if you talk to the mortgage loan officer and there are concerns about your credit and whether or not you're going to be able to qualify for a mortgage, or it just would be to your benefit to maybe do some work to improve your credit or to make a budget or do any of that kind of work, we do offer free financial counseling through our nonprofit partner, GreenPath. So if you had that conversation, the MLO would be giving you this referral, but I also just want to mention it now to anyone on the call. You have the opportunity right now, even if you're a few years out from buying a house, to talk to GreenPath if you feel like you want to try and improve your credit, get out of debt, make a plan for a budget, like realistically know how much it will cost you to own a home. GreenPath is a great option. They are, again, a nonprofit. You can reach GreenPath through the link here in the slide. And I believe that my colleague is putting it into the chat now. Thank you. So feel free to avail yourself. They are available in multiple languages and they have extended business hours. So GreenPath is here for you to get ready to improve your credit or et cetera, to get ready to buy.
Yeah,
So
absolutely. I mean,
okay.
a lot of times too, when we do run your credit and review, some things do come up that you might not have been aware of, and they're a great
Mhm.
resource to kind of assist you, because
Yep.
your credit score, it's going to be part into the interest rate you're going to receive, so it is a big factor. So it's really good to kind of get these things buttoned down, and definitely reach
Yeah.
out to GreenPath as they can assist you further.
Okay. Great. All right.
Great. So, kind of going back to the other one. So, we have your pre-qualification, we have your pre-approval. So, once you're issued that official pre-approval certificate, that certificate's going to be good for 90 days. So, listed on that, it's going to have the date it was issued, purchase price, loan amount, loan type, and then property type. So, that's going to enable you to start going out there and making offers on properties, showing that you have been backed by a financial institution for X amount. So you've found your lender. So really the next step in the process is going to be in assembling your team is to find a buyer's agent. So really what you want to do is you want to find a buyer's agent that's community based in the area that you're looking to purchase in, that's full-time and experienced. So once you have your buyer's agent, we'll all start working together on purchasing your home. And then once your offer is accepted on that home, typically that's when we're going to bring in the real estate attorney. They're going to represent you. They'll handle the closing for us. So in order to do so, they'll need to be real estate specific. You want their location to be accessible to you because you will have to attend the closing in person, typically going to be at their office. And then you want to discuss the costs with them too because they do vary by firm.
Before we move on, we had a couple questions, Ryan, that I thought maybe you might just want to answer
Sure. Yeah.
now. What credit is good or minimum to work with us?
Sure. So I'll start with so the top tier credit, that's going to be 780 plus, so 780 all the way up. We can lend to you. The minimum is going to be 620. So
Okay,
yeah.
super. Um, and then also someone said there was an earlier mention of portfolio lending. Can you say a little bit more about what that is?
Yeah, sure thing. So portfolio loans, these are essentially we're going to keep them in-house on our books because we do engage sometimes in selling loans in the secondary market, which would go to Fannie Mae or Federal Home Loan Bank. But again, we'll always reserve the right to service. It's a common practice for banks to do this.
Mhm.
Portfolio means that we will keep it in-house. We will own that loan. It will be on our books. Sometimes there's a property. There might be something, there's certain scenarios where it can come up where it doesn't conform to Fannie Mae's guidelines. So it's one of those things, we'll review it. There's a few loan products too that are portfolio. So like our adjustable rate mortgages are portfolio loans as well.
Okay, thank you so much.
Yep.
Um, shall we go on to the next slide?
Let's go on, Jen.
Okay, all right.
Great. So yeah, once you have that buyer's agent with you, it's time to start identifying the properties. So what you really want to do is make a detailed list. What are you looking for in a home? The location is, do you need it to be close to work, easy commute, good schools for your kids, urban or suburban setting? What type of property are you looking for too? Are you condo, house, multifamily? These are all things to consider. And then what are your desired must-haves? Do you need a backyard? Do you need space? Does that not matter? So these are all good things to list and then discuss with your buyer's agent as you start to look for your home.
When I was buying the home I'm in now, um, I was married and I'm now divorced. Every time I pull into my garage, I thank my ex-husband because that was his must-have.
Oh,
I
love
really
it.
wanted a backyard and he really wanted a garage. And I was like, I'm fine with street parking. We've been doing it for so long. It is so nice in weather like this to pull into a garage.
And you got a new roof on it, right, Jen?
Yes, I do.
Yeah, right.
Yes. Anyway, but it is good, especially when you have a couple, to really think about what are the things that are both of your baselines, right? So we did have a question that I think is relevant here. Just
Yeah.
if you have a pre-approval, is it good for whether or not you decide on a house or a condo, or do you need a different kind?
Yeah, so typically we will, so again, that's going to be listed. I mean, the most common one when we do the pre-approval for you, because we'll list the property type, it's typically going to be a single family condo or townhouse, like a 1 unit property. But I mean, we also offer multifamily properties, so, but that'll all be listed on there. It is good to answer
Okay.
the question shortly. Yeah.
All right. Super. All right. So now,
Hand it over to the real expert here.
okay,
There you
Daisy.
go, Daisy.
I found a new place. Now what, Daisy?
Yes, so this is where the fun begins. So once you find a new place, you're gonna go to after looking, for the property, you found the right property. We're gonna go to preparing an offer, and this is something you are going to engage your agent, the buyer's agent, in helping you do. So the buyer's agent is gonna be the one that essentially helps you draft a contract, which is it depends on the state where you're buying the property. In Massachusetts, it's typically a two-step process where you first go to like accepted offer. But in many other states like New Hampshire, Maine, it's only like one process where it's the purchase and sales agreement. And typically you start engaging the attorney earlier on in the process. But I'm just going to speak about Massachusetts. In Massachusetts, the first step is making an offer. Typically, you're going to give a deposit of $1,000, and that offer is going to list whatever you want to have happen as part of the transaction. Your desired closing date, like a day by which the seller needs to respond to your offer, letting you know whether or not the offer is accepted, as well as like the purchase price, how much you're thinking that you're going to put as a down payment. Then you're going to want to have contingencies, and contingencies essentially protects you as the buyer, um, basically protecting your deposit. So you want to have a mortgage contingency unless you think that you can afford to buy the property cash on your own. You want to list, basically this offer is subject to me being able to get financing from a lender. Um, you want to have an inspection contingency. You're not required to have an inspection as far as like the lender is concerned, but we would advise you to do it just because a lot of the properties, especially if you're buying in New England, they're older. You want to make sure the property is structurally sound, that there's no major thing happening, like negatively impacting the transaction. Um, in some instances, depending on how crazy the market is, you may want to have an appraisal contingency. And that's essentially you saying that if the property, like if you were to offer up above the asking price, you want to put like, if the property appraises for this amount of money, then, if it doesn't appraise for that, then we could go back to the table and try to negotiate a purchase price.
Mm,
And also like the next step will be, after the offer is accepted, then we're going to go to the next step in the process.
okay. Um, there's a lot on this one.
Yes. So after your offer is accepted, it's really when the clock starts ticking as far as the transaction is concerned. So you get an offer accepted. As you're working with an attorney, like let's say after you do the inspection, you're going to start engaging an attorney to help you draft the second contract if you're buying in Massachusetts, which is a purchase and sales agreement contract. This is a legally binding contract. So anything that you want to have happen after doing the inspection of the property, this is where you're going to list it. It's going to be signed by you and by the seller. Once you have the purchase and sales agreement, then you go to or once you're sure, as you're working with your attorney to draft the purchase and sales agreement, then you go to converting your existing pre-approval to an actual application to purchase a specific property. And at that point is when we're going to discuss the rates, the term that you want to pursue, because everything is, yes, it's tied to your credit, your income, but it's also tied to the property, the specific property you're looking to purchase. Once you lock the rate or decide that you're going to proceed with a lender, then you get a couple of days after you get what is called a loan estimate. And that's essentially like what it is. It's an estimate that shows you potentially what the costs are going to be for you to purchase this property. Nothing is going to be confirmed until the end of the transaction, and that's done by your attorney, who potentially will be the closing attorney of this transaction.
Mhm.
So the lender is going to ask you to provide documentation, and essentially what the documentation is. So whatever you stated at the time of pre-approval, as far as your income is concerned, as far as your assets, etc., you're going to now have to prove it with bank statements, W-2s, updated pay stubs, and depending on how much time has happened since you got pre-approved and your credit was checked, we may need to do another credit check. It's a hard inquiry on your credit to confirm that basically you haven't made any major purchases and you can still afford to purchase a property.
So I think that leads into our warning on this slide, right, Daisy?
Yes, exactly. So once you are going through the process, we would advise you to not make any check credit again, like obtain credit cards. Hold off on buying furniture until after you've closed on the property. You don't
Yeah.
want to make any large transactions just because everything from this, like the point of view, converting your pre-approval to an actual application is when everything's going to be reviewed very thoroughly. First by the processor, whoever that person is, and then by the underwriting team. And if you're putting less than 20% down payment, where you're going to need private mortgage insurance, then you're going to have another set of underwriting that's going to happen as part of the private mortgage insurance company when they're agreeing to guarantee your loan. Um, you also want to make sure that you are cautious when making a lot of large transfers, from your savings to checking. Like you don't want to make too many transfers because everything is going to be, you have to verify and you have to provide a paper trail. So if it's anything like minor that's like normal, it's fine, but you don't want to be transferring too much money between accounts because again, everything's going to have to be verified once you go through the application process.
Yeah, I remember the first time that I bought a house, we got some money from each of our family, and we had to have like letters verifying that they were gifts and not loans. I remember that being part of the process. So,
Exactly.
um,
Yeah. If you're getting a
yeah,
gift, you want to make sure that you have if you're getting a gift, and that's a good point, Jen, you, it has to be from an immediate family member. It cannot be from a friend. It cannot be from, a coworker. If you're going to receive a gift, it's going to be a letter that you have to complete, basically saying that it's not a loan, that it's a gift, that you're not obligated to pay it back.
right. Yeah. Okay. We should also be so lucky to have random people giving us money, right?
Yes, that would be
Um,
nice.
it would be. Yeah, so I think also there's a temptation like, oh, I'm gonna go to Home Depot and I'm gonna buy all my new appliances or something. Don't do that on your new Home Depot card. Don't open a new credit card, none of that. Wait until it's
Exactly.
all finalized. Okay. Uh, important stuff. Okay. So then we move on to the next steps.
So yeah, so this is where basically after we've done an appraisal, verify that the property has sufficient value, etc. So your application is processed. Any final paperwork is going to be requested of you. So until the end, it could be basically everything's going to move based on the information that we've received at the time. Where this is the goal, but step 7 is essentially the goal. You want to get a mortgage commitment letter, and that
Mhm.
commitment letter it's basically the lender telling you that yes, after we reviewed everything that you supplied and that you stated, your application is approved. Sometimes a commitment letter is conditional depending on what transpired. Like if you don't have PMI from the private mortgage insurance company might request all the items. The goal is to have a clear commitment letter or as clear as possible so you can move. It could be more smoothly to the next phase. So after your loan is clear to close. So whatever conditions may have been a part of the commitment letter, they have been reviewed, we obtained whatever explanation or documents from you, then your loan is going to be clear to close. And what that means to you essentially is that the underwriting team is saying, yes, we're okay with this loan. They'll give the instructions to the closing attorney. And at that point, the closing attorney is going to take over the transaction. So your closing attorney is going to send basically at that point, reach out to the seller, confirm any, costs that you may have to pay. They'll check with the city or town, the county, just to confirm what the recording charges are going to be, etc. Because the closing attorney is going to be the person that essentially pays everybody involved. So at the end, the lender is going to send them a wire with the proceeds of your loan, and then you're going to pay whatever remaining funds are due to the closing attorney. So they could pay the seller, they could pay your agent, the seller's agent, and everybody that's a part of the transaction. So
Okay.
after your loan, let's say after no more than 3 days after your loan is being cleared to close, before you schedule closing date, we're gonna do like a closing team is gonna check your credit again. It's gonna be a soft inquiry on your credit, and that's essentially to confirm that you can still afford the loan. And we're also gonna verify if you are employed. Um, we're gonna verify that you're still employed and that you can still proceed with the transaction. and then the closing disclosure is going to be issued by the closing attorney. So when you receive the closing disclosure, you have to acknowledge that you received them, and that needs to happen at least 4 days before your scheduled closing date. You're not agreeing to proceed with the loan, or anything could be, if you see like any numbers that are wrong, you want to make sure that you want to verify everything. Your closing attorney can still make updates to the documents or confirm that like whatever money you need to bring to closing, but you still need to acknowledge it 4 days basically before closing.
Okay. And you mentioned a soft inquiry on your credit. So that's something that if you do a soft inquiry, it's not going to pull your credit down in any way, right? It's
Correct. It's just basically checking that you haven't incurred any new debts, and that's why it's important not to buy new furniture or anything until you have the keys of the property.
mhm. Just backing up a little bit, we had a question about does pre-approval affect your credit? When does the actual hard credit pull happen in this process?
So the hard credit inquiry will happen at the time of pre-approval.
Uh-huh.
Because basically the point of the pre-approval is for the lender to say, based on your financials, we can, give you a loan pending the
Right.
property. So, and the seller is going to want to know that we have done like as a lender, done our due diligence to make sure that your credit is adequate for you to be able to finance the property.
Mm-hmm. So if somebody is shopping around to more than one lender, they should be doing all of those pre-approvals within a certain period of time, correct? To keep it to one
Yes,
income.
you can get pre-approved from multiple lenders if you want, but I don't know that it would, unless you're looking for like a specific program that some
Yeah.
lender may not offer.
Yeah.
Get it pre-approved. You can get pre-approved from one lender. You really want to shop around if you are looking to shop around for interest rates after you have a property, and that's when you want to do it. With it, like if
I
you do
see.
a pre-approval to either buy a vehicle or a home within like 30 days, it counts as one inquiry.
Okay. Thank you.
Of course.
Okay. Are we ready for the next slide?
Yes.
Okay.
So yeah, so now you have, approval from the lender, you have the mortgage commitment letter, you have the closing disclosure. So this is what I was saying earlier. So you want to like review everything just to make sure that the financials are okay and that the numbers, are correct. And you do that with your closing attorney a few days before your scheduled closing day. Sometimes it's like one day before. Sometimes they do it like in the morning off. Your agent is going to take you to view the property once again, just to make sure that everything that you stated as part of the, when you made the offer, when you signed the purchase and sales agreement, has transpired. That basically essentially what that means is what you think you're buying or what you thought you were going to buy is actually in fact was what the property looks like by the time you go a few days before or a day before to view the property, just to make sure that everything is okay. That, if you wanted a chandelier as part of the process, you want appliances, you want to make sure that everything is as it was when you went to view the property.
Right. Yeah. And I think the attorney I know tomorrow goes through some of that about making sure you're putting in the documents, the legal documents, exactly what's expected to stay and what the seller is allowed to take with them. So I know she talks through that kind of thing.
Correct.
But yeah, hopefully you get there and everything is as expected and your walkthrough goes well. So then I think we have some questions loaded up. Is there anything else you want to say before we dive into some questions, Daisy?
So essentially, if you always reach out, like as Ryan was mentioning at the beginning, it's always good to have a conversation. Especially if you decided that you want to buy a property and you're like, let's say 6, 7 months out, that way that way you have a clear plan of what to do if you want to, so you can execute it correctly once you're ready to move to the next step of getting the pre-approval and seriously considering buying a property. So we can schedule a time, like with any of the loan officers, just to have a conversation if you want. And it's always good when you're setting up the time to, have questions that you want to ask you, so the process goes a little better when you have like a clear, questions that you want to have answered as part of the process.
Yeah. Yeah. So don't be shy. We later in the presentation, we have all four of our mortgage loan officers, contact info, And again, you're going to get these slides sent to you, so you don't have to write everything down, but you can reach out to any of our MLOs, ask your questions, and figure out about your particular situation. This is kind of a little bit general because it's for everyone, right? But you may have certain things that are particular to you. We did have a question come in live. What is the average time frame for a closing?
So the average is like around 30 days, but every process is basically like is different. Sometimes we've been able to close within like 3 weeks. It all depends on what, the type of property, how quickly we get the appraisal back.
Yeah,
And usually it's a little easier when it's like, let's say a single family or when there's like not like a large association involved. Like if it's like a condominium that's part of like less than like, 2 to 4 units instead of like having like hundreds of units, etc. Just so I would say the average around 30 days, but it basically depends on the transaction.
okay, okay. So we're going to go through some of the questions that we got ahead of time, and then we're also going to jump into any that are coming in live that we haven't answered yet. I'm just going to alternate. Ryan, what do I need to do in order to qualify for buying my first house?
Yeah, so what you need to do, I mean, really just prepare, get everything in order. You want to have a good financial sense, of what you can afford, what you're comfortable paying. So obviously have a discussion with your loan officer and see where we can qualify you for. One of the biggest things with preparing before you do discuss with us, I've said it before, but collect your documents just so we know. So you have your bank statements, your most recent pay stubs, W-2s, taxes. That way, just everything's on file. You have
Mhm.
it. We can review it. It makes the process a lot quicker, for you and a lot more streamlined.
Yeah, okay. Um, And then we did mention Green Path earlier. If you
Yep.
want to work on improving your credit, you can do that individually with a counselor for free with Green Path. So, Daisy, how much is a typical down payment for a home?
So it depends on your financial situation, but I would say the average is like 5 to 10%. Um,
Okay.
if you're a first-time home buyer, your down payment could be as low as 3%. But like the average that I've seen is about, yeah, give or take 5 to 10%.
And then only if you're over, is it 20%? Then you don't have to pay PMI private mortgage insurance. Is that correct?
Exactly. So if you put in
Mhm.
less than 20% down payment, then you're required to have what is called private mortgage insurance, and that essentially protects the lender in case you default on the mortgage. So if you are able to save 20%, we would advise you to do so. But I know everything is so expensive now that
Yeah.
it may be a little harder. So if you're able to get into the property with a lower down payment, then you can, try to make additional payments. Or let's say after 2 years of you owning the property, hopefully the property value has increased and you request from the lender, to have the PMI removed.
Yeah. Yeah. I know when I was first buying a home, it was like we were scraping from everywhere. Like we had our little savings and my mom sent me a little and, just like different, trying to put it together. But then it may be, especially if you're buying in this market, which has been a really healthy market, you may then when you're selling your first home and buying a second, you may be able to do that 20% right away. So, I know that it can seem really daunting if you're going for your first home. So hang in there. You can do it. Uh,
Yes.
Ryan, I am curious about your advice on best practices when you're selling this is just what I was talking about. So if you're selling a home that you already own and you're buying a new one, is there anything, other considerations people should have in mind as far as the lender?
Oh yeah, absolutely. So a few things to keep in mind. There's really two ways to go about this. So either you're gonna sell your home and the down payment for your new home is going to be contingent on that sale. So that would be a contingency that would be written into your offer. So the seller would have to accept that. Or if you're looking to qualify to carry both properties, you have cash on hand for the down payment of the new home, strong income where you can carry the property expenses at your first property and the new property. So I mean, you would need to qualify and have a good discussion about at the time of pre-approval with the lender. And then really, the contingencies, things like that, those are all just great discussions to have with the attorneys as well, too, just to protect you. Because
Yeah.
This is a multifaceted transaction. It's not a very straightforward one. The real estate agent's going to be key in this too. So I would be if they're juggling a sale and a purchase. So definitely want to line up a great one that can assist you with that as well.
Yeah. And I do know people who have also, like, if they need the money from the equity in their current home, I have known people who sold and rented briefly while they then found the next
Yep.
property if you're having trouble getting one with a contingency in there. So I think there are options, and I think your lawyer and realtor can walk you through those.
Yeah.
Uh,
I think
so
Jen, sorry to cut. I did write
yeah.
a blog post. I think it's on our website that kind of goes through this in detail too. I don't know
Oh,
if we have
great.
a
Okay.
link to.
Yeah, we can
Yeah,
try and
we can
link that
share.
in the email.
Yeah, it was a couple years old, but still,
Okay.
practical.
Nice. Okay, thank you. Um, Daisy, what are the biggest risks to avoid when choosing a property to purchase? Now, I know you're not along for choosing the property, and tomorrow we have a realtor and an attorney in who I think are going to have their own strong opinions on this. But is there anything you can say from the lender side?
Yeah, so I mean, so when you go view a property, you want to, especially if you're buying like a condominium, you want to make sure that the financials are, okay, that is not something that has, negative, like the budget doesn't have enough reserves, or
Mm,
also like, that there's a lot of people that are not paying their association fee. And you may, ask once you view the property, like the concentration of tenants versus like owner occupants of the association. If you buy, let's say, a single family, I mean, you want to make sure you can ask about like how the roof or anything, any major like big ticket item. How, when was the last time the roof was replaced, or the HVAC system, etc. Just you want to just keep that in mind, just because, yeah, you may be excited. Some people, especially when there's not a lot of property on the market, you may think, oh, I just want to buy any property, but you want to keep in mind that, the large expenses that could come afterwards.
hmm. Yeah, that's definitely true. Part of buying a home is that you can't just call the landlord when something breaks. Your furnace dies and it is on you. So having those conversations or figuring that out ahead of time is important. Let's see, Ryan. This is, I guess, a little bit of a similar question. This we may have already answered this, but what considerations if I'm hoping to keep a condo? So a little different. Want to keep their condo, and then buy somewhere else, and they're going to rent out the condo. What does someone need to think about if they're going to be doing that?
Yeah, so I mean, it kind of goes back to the previous one that I answered, but so you will have to be able to carry both mortgages, if there
Okay.
is a mortgage on the first property.
Yeah.
I mean, other things to consider, which, not from a lender's standpoint, maybe just like the rental, environment, which would be with the realtor, they can kind of have their finger on the pulse with that, I would say. But
Hmm.
as far as qualifying, that's going to be it. So you'll have to qualify to carry both properties.
Yeah. Okay. Um, Daisy, are there still first-time home buyer programs that allow a small down payment or 5% or less? I think you did kind of touch on this a little bit.
Yeah, absolutely. So there's different programs available. Some are lender specific, where you can put us if you're a first time home buyer. And as Ryan mentioned, like a first time home buyer is somebody that has not had ownership interest in a property in the last 3 years, like from the day that you are ready to apply for the mortgage.
Hmm.
Um, but there could be programs that could, you can put as low as 3% down payment. There's also programs depending on like your income and how it compares to the location of where the property that you're looking to buy, that could help you with the down payment. And sometimes they could help you with the closing costs, etc. So basically, yeah. So the short answer is yes, there's still programs available.
Yes. And I do want to mention that on Thursday, we are having representatives from the city of Cambridge and the city of Boston. They both cities have a program for residents who want to buy, and it's affordable home buying programs. And it'll be most relevant to people who live in Cambridge or Boston, but they will be touching on some other programs as well. So feel free to join us for that webinar and dive into that if you're able to. Okay, I think we've already answered this, Ryan, because you said if this person was an owner, it's a little bit more complicated situation, but let's just say they were an owner, last time was in 2018, that's more than 3 years ago. So they're a first-time home buyer.
If the property was sold, yeah, or it was refinanced and you no longer have ownership on the deed, yeah. So you'd
Okay,
qualify.
I see.
Yeah.
All right, so a little bit more complicated. Maybe call us and we can dive
Yes.
into that. Yeah. Okay. Um, Daisy, this person's a senior considering buying a small home after or just before I retire. What are the pros and cons? I'm wondering about like qualifying for a mortgage. Is it better to do it while you have your salary?
I mean, yes, it could be. It all depends on, what you're getting as income. So essentially, if your income before you retire is more healthy than after you retire, because you're going to be more like on a fixed income, it may be best to complete that process prior to retiring. So we could use the income from your employment just for qualifying purposes.
Mm-hmm. Okay. Any other things that they should keep in mind?
So basically, you like at the end, they're going to verify your income. So you want to make sure that you do everything before even, giving notice to your employer that you're going to retire, just because when they go to check whether or not you are still employed at the end of the transaction, if you, depending on the lender, how they report it, they may say that this person is spending, leaving the company because of retirement. That could affect whether you qualify for the mortgage.
I see. Okay. Yeah, so again, call us if you have, want to talk through your particular situation, but that's a great start. Thank you, Daisy. Um, Actually, I'm going to kick this one to Daisy again too. So what are the financing options for ITIN holders? Those are folks who have the international tax ID number instead of a social security number. Are we able to handle if we have a member who's international but is living here and wants to buy a home here? Can we help with
Yeah,
that?
so we can. So essentially what we need is to confirm that. So as part of the process, we're going to have to complete what is called an ID verification form. And we'll need to confirm that, with either your visa and passport or a permanent resident card or employment authorization card, that you're legally in the US and that your visa or the paperwork is not going to expire immediately after closing. Um, so if you have credit, I mean, it depends on the country the country where you're from, to be honest, because we may be able depending on the country, we may be able to verify, if you don't have like a lot of credit in the US, we may be able to supplement that credit in other ways.
Okay, thank you. Um,
Of course.
Okay. I wasn't sure if we'll be able to answer this one. Might be another one where it's like, hey, call us because I wasn't sure. This person, I already own a home with my husband. We are planning to sell and I want to buy a home by myself. How should I proceed? I wasn't sure if this person was talking about getting divorced or not. So Ryan, do you think this person should just call us?
I do. Yeah, I think there's a
Yeah.
lot of specifics to kind of unpack
Uh-huh.
in this one. So
Yeah.
kind of get an overall
Um,
picture and then we can go from there and plan
yeah.
something. Kind
And
of
I have been through the process of, as I think I mentioned, a divorce. And so it's a little, there's a lot of things and you have to kind of do them in the right order, but it certainly is possible to then qualify again by yourself and,
right. Yeah, it
get
could
that
also be
done.
like a vacation home or if you want to buy like an investment home,
I
So
see.
it's yeah, so this
Yeah.
great one for a phone call scheduled to one of us.
Yeah. And again, also, you may want to talk to a lawyer as well, and you can ask this question for our real estate lawyer tomorrow if that's relevant to you. Okay. Um, so Daisy, do we lend to any investors? I know we do not do construction loans, correct?
Correct. So
But what about if I'm an investor, I want to buy a small multifamily or something like that? Is that something that we can do?
so typically, so we have an option to lend to somebody like we have the option of investment products, but that's more so like a mortgage for like it depends on what's going on. So it's best to have like an appointment, like so we can discuss the logistics. But essentially, we can finance like a property that's going to be considered for like investment purposes, where you're going to rent it. But typically, the property cannot be like it has to be like a one family property, or it cannot be like it could be like a multi-family, but it cannot be more than like 4 units typically.
I
So
see. Okay. So we're not doing major like corporate real estate investing for like giant
Exactly. Or commercial
developments.
space.
But if
Exactly.
I'm looking to buy like a 2-family or a 3-family or something like that and rent it, that's a possibility.
Exactly.
Okay, super. Um, I think we've already, yeah, well, let's just say Ryan, what is the minimum cash on hand if you want to buy a home?
Yeah, so I mean, again, this is really going to tie into the purchase price of the property, so there's
Mhm.
not really like a minimum. So if you're a first-time home buyer, you can think about it this way, 3% down of the purchase price. You have your
Mhm.
closing costs. Typically, I tell borrowers, factor in about 1.25 to 1.5% of the purchase price and closing costs. And then we also need to verify reserves. So depending on the property type, there are going to be reserves. That does not need to be liquid cash though. That can be held in a brokerage or savings or retirement. So it's really all going to be specific to your transaction. It's something we can kind of discuss with the specifics on the property
Okay.
type and things like that.
Okay. Um, and just for my financial wellness state background, I'm going to say that, if possible, you don't want to leave yourself no buffer. The minimum cash on hand might not be ideal. Maybe you want to save till you have a little bit more. But yeah, we can definitely, if you call any of our mortgage loan officers who are on this slide. So here's Daisy and Ryan, and then our two colleagues who will be on the call either tomorrow or Thursday, Sharon and Alan. Any one of them can help you. You can make an appointment, whether it's on Zoom or in person, and talk through your specific situation. I do see, and all of our rates and such are on the mortgage page, as well as the place to like make an appointment for our to meet our folks. I do see a few more questions. I think we have maybe a minute more in the that came in live. There's a couple questions are related to credit pull again. And can you just, Ryan, say a little bit more about how does the hard inquiry on a credit pull impact credit score in the process? And um, do they have 30 days to, if they were doing other credit checks, to get them done for more than one place if
Yeah,
they're shopping
so
around?
for multiple lenders, once that initial pull happens, you do have 30 days, if you want to kind of check in with them and,
Okay.
compare things. As far as the impact on that initial pull, typically it's really hard to gauge depending on your credit score, but usually 3 to 5 points, there might be a little impact. It could be more, it could be less.
Okay.
So it's really all determining of your personal,
Okay.
credit
Super.
history.
Um, And then a couple questions about if you're receiving help from a parent, how does that work? Daisy, are they able to wire the money directly to the bank during this process? I would assume they would wire it to the our member who's trying to buy, right? Like,
Correct. So,
yeah.
I mean, it all depends if like if you're buying the property, which I've seen happen multiple times with your parent, it's going to be like an owner of the property. They could send it to the attorney.
Oh,
If
okay.
you're buying the property, like your parents helping you or giving you a gift,
Mhm.
then they should wire the funds to you and you want to keep a receipt of the wire, or they could also give you a check because we're going to have to, once you get to like the point in the process, we verify whether you now you have sufficient funds for closing, we're going to have to basically trace the funds where they came
Okay.
from.
And
And
then
as
go ahead. Sorry, Daisy. I didn't cut you off.
sorry, and I mean, some people usually ask if like the money is taxed. That's something you want to speak with a tax advisor. Um,
Yes.
for our purposes, we should want to make sure that the money is not a loan. If you want to return the money back to your parents after, closing is up to you. But for as far as a lender, we just want to make sure that the money is you don't have to pay it back.
Right. Because the thing is that your lender doesn't want to have you have all these like side debts that you're having to pay. Everything is supposed to be disclosed. So that's why it needs to be a gift. And yeah, as far as any tax advice, we cannot give tax advice, but that is something that you can Google and in general, most your parent can send you a gift and there are limits, and most of us are not going to hit those limits. If you're lucky, you will. So please Google it or talk to a tax advisor. Um, Okay, so I think can Ryan, could you talk about utilizing retirement funds for the down payment as a first-time home buyer? If someone has sufficient funds in their retirement to be a first-time home buyer, how does that work?
Yep, sure thing. So those are considered secure funds. So there are two ways you can go about this. You can make a withdrawal, again, talk with a tax professional about the income and the tax
Mm-hmm.
implications of making a straight up withdrawal from your retirement account. But a lot of plan servicers, they do allow for a loan from your retirement account. Nice thing
Mm-hmm.
about those being a secured loan is that we do not have to factor in that loan payment into your debt to income ratios when we qualify you. So it is a great option if it is available to you, but it really just kind of depends, on your circumstances. If you want to be paying them back, if you want just a lump sum cash, you don't mind about the taxes. So, but definitely an option available.
Mm-hmm. Okay. Um, we have a question, Daisy. Does closing an unnecessary checking account shortly before looking to buy a home, is that going to have any impact if they close a checking account?
I mean, I don't think. I mean, it all depends on like how much money you have in a checking account, as far as trans and how quick, like when it was that you closed it. It's not going to impact you negatively because that doesn't affect your credit. So it's not going to
Mm-hmm.
affect your credit score, but it just be like make sure you keep a record of everything so that once it's time for the time comes for the lender to verify funds for closing, if there's like a transfer that shows on the statement that is received, then we may need to verify the source of it.
Mm-hmm. Okay. Ryan, if someone gets a loan through the credit union, they're asking, do we have to use an attorney from the credit union's list or can we use whoever we want? They can use
Yeah.
their own attorney.
Yeah, you can absolutely use your own attorney. So we do have an open list. So as long as they are real estate specific and they can meet our due diligence requirements for our closing department, you can use them. We do have a list of I don't know what you want to approved, our internal attorneys that kind of serve the greater Boston area and surrounding towns that are
Yeah.
great. And one of the benefits too is they do work for the credit union home buyers at a flat rate fee. So it's a set rate for their representation. So
Oh, okay,
that's
great.
yeah, that's usually one of the things in the initial phone call. We'll provide you that list just as a starting point. But if you have one you want to use, like through a legal plan at work, you're welcome to do so.
Okay. And we do have a couple questions about what are the fees that people can expect besides the $1,000 good faith deposit? What are the attorney's fees like or any other fees that people can expect?
For me, sorry.
Sure, sorry.
Yeah.
Yes, Ryan, sorry.
Oh yeah, no
I'll
problem.
just keep it with
Yeah,
you.
so I mean, as far as the closing costs go, I mean, I can kind of rattle off, kind of how they are. So there is
Mhm.
going to be an application fee. So with the credit union, that's going to be $595. There's going to be the attorney representation fee. Our in-house, that I mentioned, they charge 750. They do vary by firm, so check with them. In addition to that, there's going to be lender's title insurance, owner's title insurance is optional. There's some prepaid taxes. You'll have to purchase a homeowner's policy prior to closing, so keep that in mind if it's a single family or a multifamily.
Mhm.
And then in addition, I mean, there's a few other charges as well, just kind of through the process, municipal lien certificates, credit reports. One of the things too, we can make you an itemized estimate, like a pre-application estimate when you discuss with us, which will kind of tailor to you just so you have that all in mind there.
Okay, super. Okay, I think we are coming up on time and I think we have answered most of these. Here's one. Someone has a credit score of 680 and a regular income. Not sure what that means, but let's say they have a paycheck. Should I start looking or wait until I improve my credit score to 780? Daisy, should they?
So I mean, it's hard to tell because what you see on, like, if you look in, like in credit card statement, or like credit card money, or like this, sources that may give you an idea of your credit score. That may not actually be your score once you go through the process of applying for a mortgage. Sometimes I've seen it where when we pull credit, it's a little higher or lower depending on what's going on the credit profile. So,
Mm-hmm.
and it also depends on, let's say that your credit score is in fact 680. it will depend. Like it's hard to tell until we like go through the process because it will depend on what if you put in that much of a down payment you're putting. You know, if you're thinking of putting 20%, then BMI is not going to matter. And then depending on the type of property, etc. Even though the interest rate is affected, there's like all the different factors that also affect it. So it's hard to tell you whether to wait or not. But I mean, as long as your credit score is 620 or higher, then you shouldn't have an issue as far as that's concerned, as long as you qualify otherwise to get a mortgage.
Okay. So they can start by talking to you, even if they're not quite sure if they should proceed now or work on their credit score, depending on their situation.
Exactly.
So, everyone on here should feel free to reach out, and we're gonna email you links to do that, and you can do that on the page that's showing right now on the screen, which I believe Ty also just put in the chat. Um, I did mention that we're going to ask for your honest feedback through a survey. You will get this link sent to you, but you can also fill it out right now. We really value your feedback and try to tailor change up our future presentations based on what we hear. So again, tomorrow, and I think, yeah, Ty, thank you. Put the survey into the chat. So you can go ahead and do that sometime today if you're able. If you're able to join us tomorrow, we are going to be having the lawyer and the realtor on. So some of these questions I think are going to be a little bit more appropriate for them, and you can pose some of these questions to Sarah or Dino. Um, and then on Thursday, again, we're going to have affordable home buying with the city of Cambridge and the city of Boston. So we hope that you can join us for future days of the forum. I think Ty had already put earlier into the chat where you can register for the upcoming sessions. Same place you went probably to register initially. I do want to say thank you to both Ryan and Daisy and to everybody who joined us here today. I think we learned a lot. It is a complicated process, and thank you for breaking it down into simple, like step by step. I think it's really helpful, and I know that even when people look over the slides, it's going to help them figure out what they want to do next. But they can always just call you, correct?
Exactly. Yeah, and that's what we're here for.
Yeah.
We're
Okay.
standing by.
Yay. Thank you.
Thanks, Bill.
Thank you all for coming, and hope to see you tomorrow. And have a good rest of your day, and everybody stay warm.